The economy, of course, has been struggling globally. Many investors are looking for somewhere to allocate capital. Our next guest sees opportunities in the emerging markets, but which ones? Ruchir Sharma is with us. He is Morgan Stanley's head of emerging markets and author of Breakout Nations. Good to see you, Ruchir. Thank you so much for joining us.
Good to be back. Thanks.
So we're all waiting for the emerging markets to break out. It hasn't happened in a long time. What's the problem?
Well, the problem is China, that the Chinese economy has been slowing down continuously since really 2011. It's really like a ping pong ball bouncing down the stairs, which is that it's been bouncing down. It hasn't crashed or something, but it's been bouncing down. But if you step back, the Chinese economy has already had a hard landing. This economy was growing in nominal terms at about 15% in 2010, 2011, and that rate now is down to 5%. That's a huge slowdown that's happening in China, and China has been the single largest contributor to global growth this decade. So I think that's what's really been troubling the emerging world, and I would say the entire world now, because China is the world's second largest economy, and it hasn't been a while since we have seen another economy but the U.S. dominate the global economy in the way China has done over the last decade.
You said something really interesting, is that China already had a hard landing because there's all this talk about whether they're going to or not, but you're saying the economy did. My question for you is, did the Chinese currency have the hard landing already?
No, I think that's the real problem, that in China's case, if you look at it, the currency is still very expensive on a trade-weighted basis, which is the way most people look at currencies. The Chinese currency is still close to an all-time high. So even though they have devalued a bit against the dollar, the other currencies have fallen even a lot. So the Chinese currency today is very uncompetitive. And here's the problem, that local Chinese are taking money out of the country in droves. And if you look at every single currency crisis over the last 2 decades, it's not the foreigners or the hedge funds who file out, it's really the locals who take money out first. And that's the problem in China.
Are they putting their money in America?
Yes, partly in America, but everywhere.
Real estate in America, certainly here
from San Francisco to Vancouver to Australia. So that money is pouring out of there. The Chinese currency is, I think, the last shoe to drop, because all other emerging market currencies have corrected very significantly over the last few years.
So can emerging markets have a chance here until we're sitting here and doubting the fate of the Chinese currency?
Well, I think that the point now is that this is a new phase for the emerging world. This is 40% of the global economy now, but 35 to 40%. To speak about all emerging markets as a homogeneous entity is a bit misleading. So I think the problem is that we need to start seeing differentiation, and that's what we were talking about just a while back, that we're beginning to see that. We've got different countries at different points in the cycle, but the problem is that the Chinese economy has to stop deflating.
Yeah.
Once that happens, then we can see some light at the end of the tunnel.
How big of a drop do you think we're going to have to see in their currency to get that stabilization?
Yeah, and is that going to have a big impact on U.S. market?
Yeah, I'd say about 10 to 15%. I think that is something which will have an effect. So
the yuan, the Chinese yuan drops 10 to 15%?
Yeah, I think that in the next 12 to 18 months, that's our base case.
And what does the U.S. equity market do in response? I know it's a $1 million question. I mean, the exact number.
Well, I think that some sort of a bear market has sneaked in here as far as the U.S. is concerned. The regime has changed. That we've been in a bull market regime since 2009. It really seems to have shifted. I know we're getting a nice bounce out here, which may last for a while, but I still feel that we're in a bear market regime because these international developments are something which are going to continue to matter for the U.S. I think that's the really important bit here, that the rest of the world has never mattered that much for the U.S. as it matters now, simply because the rest of the world today is much bigger relative to the U.S. economy.
Right, sure.
Yeah. It's a very different world, yeah.
All right, we will leave it there. Ruchir, great insights. We so appreciate your time today.
Sure, thanks.
Ruchir Sharma from Morgan Stanley.